Limitations on business deductions. So we have several business deductions that are not allowed. So first, expenditures against public policy. These are things like fines, kickbacks, or other bribes. They're disallowed under the rationale that allowing them would subsidize illegal activities. Although you can note here that if you have ordinary and necessary expenses for an illegal activity, like you are a drug dealer and you have to acquire, your inventory, the amount of that is in theory deductible because it's ordinary and necessary. Any fines, kickbacks, or bribes would not be deductible. Political contributions and lobbying costs are not deductible to avoid the appearance of impropriety, so avoiding the perception that the government subsidizes the taxpayer's effort to influence politics. Capital expenditures. So you have to capitalize expenses to purchase assets with useful lives of more than 1 year. You don't get to deduct them immediately, but you're going to deduct these expenses through depreciation. So you're going to capitalize and depreciate your assets that you're holding that have a useful life of more than 1 year. And then expenses associated with the production of tax-exempt income. So an example of this is if you have interest expense on money borrowed to invest in tax-exempt bonds. So this example down here. I'm borrowing money to invest in a tax-exempt instrument. I'm not going to be able to deduct the interest associated with that borrowing because the government's already giving me a break by not taxing the income. You aren't going to get to have both, the interest expense deductible and the income non-taxable. All right, then we have personal expenditures. So there are lots of things that fall into this category also as non-deductible. So this is an example where I always bring in like my family members who say, well, I have to get a babysitter in order to go to work or to do whatever. That's a personal expenditure and not deductible as a business expense. All right, so we have an example with Gabriel, a self-employed taxpayer and owner of an IT solutions company. He incurred the following expenses in connection with his business. Assume he's a cash basis taxpayer. What is the total amount of business deduction that Gabriel can claim when filing his 2019 return? All right, so we have salaries for employees, office supplies, a speeding ticket while trying to make it to a service call, new computers for the office, depreciation on the computers, lobbying expenses, and rent for the office space. So I'm going to go through and highlight in green the ones that we are allowed to deduct for this business. The salaries for employees, yes. Office supplies, yes. The speeding ticket, no. Not going to be able to deduct the speeding ticket. It's considered a fine or a penalty. New computer for the office. This is no, because we're going to deduct the cost of that purchase through depreciation. So you're going to get to deduct the depreciation associated with the computers, but you can't deduct the full cost of the computers right out of the gate. And then we have our lobbying expenses. We know that those are not going to be allowed, so no. And then finally, the rent on the office space, yes. So when we add up all of those green allowed expenditure deductions, we get a total of $298,355 of allowed business deductions. All right, then we move on to our mixed motive expenditures. So we have a lot of these where there is both a business component and a personal component to the expense. You have to think about the reason that you're incurring the expense, and then you may be able to deduct a portion of it if it meets the requirements. It depends on the type of expenditure. So the first one is entertainment and meals and food and beverages and things like that. So first, they're deductible if ordinary, necessary, and reasonable in amount. The taxpayer or an employee must be present when the meal is provided. And the meal must be provided to a current or potential client or business contact. Okay, So I guess I should note here on the side that entertainment is no longer allowed. So this really only applies to meals, food, and beverages. Whose expenses are deductible? Anyone who serves a business purpose. So if you bring your spouse to the dinner and you're inviting the other client or potential client and their spouse, the spouses are okay. You can deduct the value of the spouse's meal because it's normally acceptable and it could serve the business purpose. How much is deductible? 50% of the meal. And I really should say 50% of the meal if the meal is reasonable in amount. So 50% of the reasonable portion. And if there's an amount that's in excess, then that would not be included in the reasonable amount, and you would exclude it entirely. The reason behind this is that the people do get a benefit. They're getting to go out to this dinner, and so we say 50% of the meal seems like the most logical answer here. All right, exceptions to the 50% limitation. If it's for advertising purposes, so I am a sandwich maker and I am making sandwiches for the general public and I'm standing outside handing them out, then I would be able to deduct the full amount. Or meals provided for the convenience of the employer. This is a very narrow exception, but this is a situation where we don't want the employee to leave the premises. So for example, we have a doctor getting meals at the hospital. It's for the convenience of the employer. It's because we don't want the doctor leaving the hospital. In that case, the employer could deduct the full cost of the meal. So new for 2018, these entertainment costs are not deductible. So that's what I was referring to up here. It's really kind of misleading. Entertainment is no longer allowed. It used to be that you could deduct the cost of going to the baseball game or going to a concert or the symphony or something like that. And that's no longer allowed because those expenditures were getting really exorbitant and the tax code said no more. No more. All right, travel and transportation. Let's switch to a different color here. So I'm going to talk about transportation and I'll switch over to blue for that one. Transportation means it's the direct cost of transporting the taxpayer to and from business sites. So you can think about as an auditor, the cost of going from one client to another client or something like that. I want to make sure you know the cost of commuting from home to the office is not deductible. That's not what we're talking about here. We're talking about moving the employee or the person from business site 1 to business site 2. The taxpayer can deduct the cost of operating the vehicle plus the depreciation or the standard mileage rate. And for this purpose, the standard mileage rate is 58 cents per mile. Okay, so when you can deduct it, you can deduct the cost of operating the vehicle plus depreciation. So the cost of operating the vehicle would be like gas or oil changes or things like that. Or you can go with the mileage rate and keep it a little bit more simple. These are only deductible when for a business purpose. Okay, so it's not driving around town, it's only when you're driving from client A to client B, or so on and so forth. So Troy leases a truck to drive between his business and his clients' work sites. Troy has documented his business use of the vehicle was 9,200 miles, and his operating expenses were $68.35. Oil, gas, repairs, and lease payments. The truck is used entirely for business purposes. How much can Troy deduct as a business expense? So Troy can deduct either the operating costs, and that includes the lease payments, or number 2, the standard mileage, which is 58 cents per mile. The operating costs were $6,835. Standard mileage would be 58 cents times the 9,200 miles, or $5,336. Assuming Troy opts to deduct operating costs, so the bigger one, he will deduct $68.35. I want you to also note, because Troy doesn't own the truck, can't deduct depreciation. If he did own the truck, he would also deduct the depreciation. All right, let's talk then about travel. Travel and transportation frequently get confused. So travel I'm going to talk about in green. Travel is any expense incurred while traveling for business purposes. So it could be the cost of the transportation, the airfare, whatever it is, hotel, half of meals, and incidentals. So tips that you have to pay for people to help you with your baggage. Laundry, you have to pay to have your laundry done because you don't have your washer and dryer. Those sorts of things are included in travel. Make sure you note that it's still only 50% of meals. Okay? It's still only 50% of meals. And these are deductible if you're away from home overnight. Okay, so a couple of things. Home is where the taxpayer conducts most business. Okay, it's where the taxpayer conducts the business. Overnight means long enough that you require sleep. So long enough that the taxpayer requires sleep. In contrast to transportation, so transportation doesn't have these requirements. Transportation is to and from business sites. Travel is you're away from home overnight. So you're away from the place where your tax home, where you conduct most of your business, long enough that you require sleep. And that's important because when those things are met, you can deduct the transportation, so getting there, the hotel, the other lodging, half of meals, and incidentals. So the fact that you're in this away from home overnight mode means that you can deduct these other elements as well. All right, you have to be incurring the expenses for a legitimate business purpose. You reasonably expect that your business is going to have additional profit as a result of you doing this. And your primary purpose of the trip also has to be for business purposes. We define the primary purpose as the amount of time you're focused on business. So, amount of time spent on business. So if you spend more than 50% of time on business, then we'd say it's a primary business purpose. All right, you're allowed to deduct transportation costs to the location, and the business portion, I'm going to highlight that, the business portion of the hotel's meals and transportation. So we'll see an example in a minute, but if you're on an extended trip, and you're staying in the hotel for a couple of days for a conference, and then you're staying for a couple of more days to go sightseeing, the number of days that you're spent on business, those are the nights you can deduct in your hotel room. The additional nights that you choose to stay to go sightseeing are not going to be deductible. All right. Then if the primary purpose is not business related, the transportation costs to get to the location are not deductible. So the transportation, the getting there, the airfare, or whatever it is an all or nothing proposition. All right. Here's our example. You're self-employed and you take a trip. The trip is 7 days total. 5 days are for business and 2 days are for personal vacation. You incur the following costs. So we have $900 in airfare, subway fare, which is a daily rate of $8, the hotel of $185 daily, meals are $60 daily, and incidentals are $25 daily. How much is deductible? So we're looking first at the business percentage. The trip is 7 days long. 5 of the 7 days are business, so 71% is business. We say then it's primarily for business. When it's primarily business, you get all of the transportation to get there, the airfare. For the subway, you would get 5 days worth because 5 days are business, and it's $8 per day, so you'd get $40. The hotel, 5 days are business at $185 a night, so you'd get $925. Then you'd have meals. You get 5 days at $60 per day, and then you have to take half because there's still meals and you still are restricted to half. So $150. And then incidentals, 5 days at $25 per day, $125. So the total deductible for business, $2,140. We'll call that deductible travel. Now, what if instead 2 days were for business and 5 days were for personal reasons? So our business percentage is 2 over the 7 days. Only about 28% are business, so it's not primarily business. When it's not primarily business, you're not going to get any of that flight. For the subway, you'll get 2 days at $8 per day or $16. For the hotel, you'll get your 2 days at $185 or $370. You'll get 2 days of meals at $60 a piece, limited to half. So for meals, you'll just get the $60, and then incidentals, 2 days at $25 for a total of $50. Total deductible travel, $496 in that case. So the big key to this is that the way you're getting there, if it's primarily business, then you get to deduct how you got there. If it's not primarily business, then you don't. And the other costs are really based on how many days were business and so on. All right, then we have mixed use property expenses. So these are expenses that are used for both personal and business reasons. We're typically thinking about things like cars and computers. So I have a computer for work. I'm self-employed, but it's my only computer. I use it for other things too. How much of that computer should be deductible and how much should not? So we say, how much is deductible? The amount of the expense multiplied by the percentage of business use. So you're going to say I use it half for business and half for work. Then you're going to use 50-50. All right. If we're talking about an automobile, so I have an automobile that I use for work and I also use it for driving around town. I can use 58 cents as the standard mileage rate. That includes all expenses for running and maintaining the vehicle, so oil, gas, insurance, and depreciation. So oil, gas, insurance, and depreciation. Or if I have an automobile, I can use the actual cost. So the actual depreciation, repairs, oil, and licenses, plus tolls and parking for business trips. You have to keep track of this, the receipts for this, and then you're only going to be able to deduct the business percentage. Okay, so you still have to say, I use this car 50% for business and 50% for personal, and that's going to be a consideration as well. If you start with one method for the car, you're not able to switch to a different method during the life of the vehicle. So maybe we'll just make a note on the side. One method for the vehicle's life. You can't switch back and forth. All right, well, what if you're self-employed? You're allowed to deduct the business percentage of the interest on your car loan and the business percentage of any property taxes on the car's value. These are 4 AGI deductions, and the personal percentage is a from AGI deduction for the property taxes on the car. So you have a car, you pay property taxes on it. If you're 50-50 business and 50-50 personal, the 50% that's a business property tax on the car would be a 4 AGI deduction, and the 50% that was personal would be a from AGI deduction. All right, what qualifies as business use of an automobile? Any sort of out-of-town travel to and from a temporary job, driving from the regular workplace to a temporary place, so maybe your client, or driving from one client to another client. Remember, commuting from your home to the office is not deductible. And you don't get to claim transportation and this deduction. It's one or the other for business miles. So transportation costs are primarily claimed when an employee drives their personal car and is reimbursed. This mixed-use property deduction is more often claimed by corporations and self-employed taxpayers. All right, so assume we're a self-employed taxpayer and incur the following expenses. We have $4,500 in gas and oil, insurance is $800, interest on our car loan is $1,200, automobile tax based on value is $250, we have tolls, depreciation, and we drive 20,000 miles for business purposes and 5,000 miles for personal purposes. What is the mixed use property expense deduction related to this if we're using the standard mileage rate or if we're using the actual cost method? So on the left side, we'll do the standard mileage rate, and on the right, we'll do the actual cost. Okay, so if we're doing the standard mileage rate, we're talking about how much can we deduct for business purposes. So we're going to take the business miles times the 58 cents and get $11,600. You can also add in tolls, $440, interest on the car loan because we're self-employed. So that's it's $960, which is calculated as 1,200 times 20 over 25. So the 20 is the business miles over 25,000 total miles. And then the taxes, because also self-employed, same calculation. Total taxes are $250, and you prorate it. My business share of the car is 20,000 of the 25,000 total miles, and that means my tax is $200. I add that up, and I get $13,200 as the deductible mixed use car expense. If I use the actual costs, I would do the oil and gas, $4,500, the insurance, $800, depreciation, $6,500, interest and taxes again, $1,200, tax, $250. The total is $13,250, and then we multiply that whole amount by the pro rata share that is business, so 80%, to get $10,600, and then we can add in the tolls of $440. Total deduction $11,040. So if we use the actual cost method, you're looking at the actual oil, insurance, depreciation, interest, and taxes. You have to then figure out how much is business purpose, and then you're allowed to add in those tolls because those tolls are entirely business purpose. So in this case, the taxpayer would likely take the larger and use the standard mileage rate to deduct $13,200 in mixed use car expenses for this vehicle.